Hello students, this is Sonette Smith and this is the first lecture on Chapter 10, Non-Profit Entities for FRK 121. So our learning outcomes are the following. The most important learning outcome that we'll focus on is the preparation of the membership fees account for a club. We are also going to briefly touch on how to prepare a statement of receipts and payments for a non-profit entity, a trading account, the statement of income and expenditure, and the statement of financial position for a non-profit entity. But these will just be for information. These learning outcomes will not be examinable. So what is a non-profit entity? It's an entity that is set up not to make profit. The entity is set up for some other purpose, usually for a common good. For example, it could be a club, or it could be a school, or it could be a charitable entity. Non-profit entities are governed by the Companies Act. It's one of the types of companies that can be formed. In terms of the New Companies Act, Section 10 is applicable. Non-profit entities' financial statements don't have to comply with IFRS. IFRS stands for International Financial Reporting Standards, and these get used for the financial statements prepared for companies, but they don't have to be done in this way for non-profit entities. Also, they don't have to have their financial statements audited like companies do. Just to go back on that, they can have them audited if they want to, but they don't have to. The tax implications, they would normally be liable for income tax, but they can apply to get exemption for that. They'd also be liable to have to register to pay VAT if they meet the requirements to be a VAT vendor. You will not be tested on the tax implications of non-profit entities. So examples of NPCs. NPC stands for non-profit company, and that's the abbreviation we use. Like we use the abbreviation SOE for state-owned entities, this is the abbreviation for non-profit companies. Clubs, schools, charitable organizations are all types of could all be types of non-profit companies. So if we look at the statement of financial position for Prince Albert Touch Rugby Club, this is a non-profit company. The thing that's different about the statement of financial position is under the equity section, we have something called accumulated fund. So we don't have amounts that have been invested by the owners or by the shareholders. The accumulated funds are basically all the profits or the surplus that's been retained in the club since its inception up until this date, which is the 31st of December 2013. The accumulated fund is the difference between the assets and liabilities of the club at the end of the year. The accumulated funds are therefore the surplus funds that have been made in the entity. It's the difference between income and expenses, and all of the surplus funds get transferred into this accumulated fund account. And that is the equity of the non-profit company. We're going to look at example 10.1 to see what the general ledger account for accumulated funds looks like. So in this example, we have an opening balance at the beginning of the year, the 1st of January 2014, of 40,000. Accumulated fund is equity, so it has a credit balance of 40,000. Then during this year, income minus expenses gave us a surplus of 20,000. So we would have had an income and expenditure account, which would have been debited, and here we're crediting accumulated funds with the surplus for the year. That gives us a closing credit balance of 60,000 of accumulated funds at the end of the year. In a business, if the business closes down, normally what happens is that the balance on equity can get repaid to the owners or the shareholders once everybody else has been paid. But with a non-profit company, the balance on the accumulated fund, it's usually set up in the incorporation documents of the company that these amounts would have to be used for another similar purpose, so they could be donated to a similar organization, for example. A statement of receipts and payments is something that will get used typically in small non-profit companies where they're really just doing everything on a cash basis. In other words, they're working with a bank account, they don't buy much on credit, they don't sell anything on credit. So they record their transactions in cash and there's no accrual. Accrual happens when we accrue for income in the period it relates to, even if we haven't received the money, or we accrue for expenses in the period it relates to, even if we haven't physically paid the expenses. So a statement of receipts and payments just shows the cash transactions. If you look at example 10.5, it shows what the statement looks like. So here in example 10.5, you can see you start with the opening cash balance at the beginning of the year, you end with the closing cash balance in the end of the year, and here you're adding all your receipts during the year, their membership fees, this is the Monument Knitting Project, membership fees, entrance fees, donations and interest, that's all their income they've received. They've purchased wool, knitting needles, rented a venue and paid for refreshments, those are all their expenses. So the statement of receipts and payments basically is saying this is how much money we had at the beginning of the year, this is how much we received, and that's what it was for, and then this is how much we've spent, and this is what we've got left at the end of the year. It's a very basic financial statement that's prepared. It doesn't comply with any kind of reporting standards. It's really done normally in just small clubs where there are no accruals necessary. You will not be tested on the statement of receipts and payments. The financial statements of a non-profit entity then can start with a statement of receipts and payments where you would show all of your actual monies received and paid. But if you now want to go to preparing a proper set of financial statements, the statement of receipts and payments would need to have adjustments made for accruals. Accruals being debtors and creditors. You would then end up with a statement of income and expenditure where you're showing income, even if you haven't received the income, but you accrue for the income in the period it relates to, and you show expenditure also in the period it relates to, even though you might not have paid the expenditure. So that's why you would accrue for debtors for income and creditors for expenditure. And those would be shown on your statement of financial position. So these financial statements we're showing you merely for information purposes. You're not going to be tested on them. The kinds of adjustments or the kinds of entries or transactions in a club that are particular to a club that you don't really find in other entities are entrance fees, and we'll also talk about membership fees. So if you want to join a club, for example, you're often required to pay an entrance fee. Your accounting entry normally is debit, bank, credit, interest fees, which is a type of income. You normally close the entrance fees account at the end of the year. It's a nominal account. You close it to your profit and loss account, which we call the income and expenditure account. However, management could decide that some of the entrance fees should go straight to the accumulated fund. And in example 10.6, you'll see an example of how this is done. You will also not be tested on this in the exams. So the most important section of non-profit entities is membership fees, and I'm going to talk you through how you do the calculation and accounting for membership fees, and this is what you can expect to be tested on. So the accounting entries for membership fees. The first step is that you're going to reverse the prior year adjustments at the beginning of the year. So you'll see at the end of every year you are going to account for membership fees in arrears that haven't yet been paid for. So every year you're going to see who still owes you membership fees and account for that. At the beginning of the next year you'll reverse it, and you'll also account for membership fees that you might have received in advance, and that will be like a liability, and you will reverse those at the beginning of the year as well. We did something similar already when we did chapter 6. During the year, we're going to record the actual membership fees that we physically receive, and then at the end of the year, We're going to write off any membership fees that won't be recovered. That's like a credit loss. And then we're going to do adjustments for membership fees in arrears, membership fees received in advance. So membership fees in arrears are like a debtor, and membership fees received in advance are a liability, because those are amounts that we'd have to pay back if the membership fee, for example, was cancelled. Then we're going to do the closing transfers from the membership fees account to the income and expenditure account. So these are the entries that have to be done in the membership fees account during the year. We're going to use example 10.7 to explain how the membership fees account is put together. So we're given balances and transactions in the books of No Violence Against Animals non-profit company. This is a club, and we've got an extract from the statement of financial position at the 30th of June 2013, and then we have an extract from the statement of receipts and payments for 30th of June 2014. So this is at the end of the prior year, the beginning of the current year, and this is money that we've received during the current year up until the year ended 30th of June 2014. So our first step is we are going to look at what amounts were accrued for at the end of last year, that's the 30th of June 2013, because we've got to reverse those. That's our first step in the beginning of the next year. The next year ends 30th of June 2014, but it will start on the 1st of July 2013. So we are first going to look at the membership fees receivable. So last year we would have done an entry debiting membership fees receivable, which are an asset, and crediting membership fees, and we would have done an entry for membership fees received in advance that we'll take out of membership fees of last year because they don't relate to that year, and we would have credited membership fees received in advance 320. So this would be a credit balance, membership fees received in advance, and membership fees receivable would have had a debit balance. And these amounts now, the first step is we need to reverse them. So we're looking at step 1 to do the reversals. The statement of financial position on the 30th of June 2013 tells us 640 was receivable last year, hadn't yet been paid, and 320 was received in advance at the end of last year, which was actually for the current year that we're busy with now. So these are the journal entries we'll have to do at the beginning of the current year. The membership fees receivable, remember I said had a debit balance. We reduce that by crediting membership fees receivable, and we're going to debit the membership fees account. And the membership fees received in advance, remember I said had a credit balance. We're now going to debit membership fees received in advance and credit membership fees. So if you now look at the membership fees account, this is the membership fees account for the year ended June 2014. And in the membership fees account, you'll now see on the credit side, remember membership fees is an income. It's a nominal account. It's going to get closed off at the end of the year. We expect it to have a credit balance. So now on the credit side, we have membership fees that were received last year, but they only related to this year. So now they've ended up on the credit side of our income account, which is correct. On the debit side of the membership fees account, we have membership fees that we accrued for last year, but hadn't yet been received. We will find that those membership fees are actually going to get paid this year. Some of them might not get paid, then we'll write them off. So those amounts will be in these credit amounts here for bank and membership fees written off. But we started off by first reversing the entry we did last year by crediting the membership fees receivable account, which had a debit balance, and debiting membership fees. And this debit, as I said, is going to be offset by part of the bank entry and the membership fees written off entry. Because remember, these membership fees would have been raised last year as income. So now we're going to look at step 2. In step 2, we are now going to account for the membership fees received in the current year, 17,440 Rand. At this stage, we're not worried about which year they're related to. You will see that 17,440 has been broken down into amounts received this year that actually were receipts for last year's membership fees. 16,720 was this year's membership fees received this year. 240 membership fees was an amount we received this year, but it's actually membership fees for next year. The total of those three comes to 17,440. So what we're going to do now in step 2, we're going to record the transactions for the year. In this case, the membership fees received of 17,440. So our journal entry is the bank account is going to increase. So we're going to debit bank, it's an asset, it increases. And we're going to credit membership fees, it's an income, increases by 17,440. So if you now look at your membership fees account, on the credit side, we have the amount of membership fees that we received for the current year, 17,440. Remember, not all of that relates to this year, but you'll see later on when we work out the actual balance on the membership fees account, we're going to then see what the actual income is for this year. This just happens to be the money we received relating to membership fees during the year. Some of it was last year's fees that hadn't yet been paid, some of it is this year's fees, and some of it is fees paid in advance for next year. Now we're going to look at step 3. Step 3 has 3 parts. The first part is we're going to look at membership fees received in advance. So we saw when we looked at the statement of receipts and payments that 240 Rand of the 17,440 were membership fees that actually relate to next year, but we've already received this money. So what we have to do now, the first adjustment is we are going to account for the membership fees received in advance, because according to the statement of receipts and payments, we had received 240, which is actually next year's membership fees. So our journal entry is going to be, we're going to take this amount out of the membership fees account. So we debit the membership fees account with 240 and we credit membership fees in advance. This is a liability. These are membership fees that actually relate to this year. So at the end of this, actually relate, to next year. So at the end of June 2014, they're not income. They're going to be income next year. So we take them out of income now and we credit the membership fees received in advance account. So in your membership fees account, you'll see here on the debit side, we've taken out the 240, which were the membership fees. Remember, it was included in the total amount in the bank account, but now we're taking out that 240 because it's not this year's membership fees, they're next year's membership fees, and we credited membership fees received in advance. Our next part of step 3 is then to look at membership fees that haven't been paid. This is a longer calculation that we need to do. What we're going to do here is first of all work out what is our expected income for the year based on the number of members we had for the year. Then we're going to take off the actual that we received, and that will give us the membership fees receivable. In other words, the membership fees that haven't yet been paid, that are still due at the end of the year. So the first thing we're going to calculate is we're going to see what is our expected income for the current year. We normally always do this by first of all looking at how many members we had, and then we're going to be looking at what the membership fee is per member to calculate our expected income. So this 204.16, I'm going to show you where you find that in the question. So you'll see here in the question they tell us the register of the club indicated on the 1st of July 2013 that the club had 196 registered members, and on the 30th of June 2014 the club had 204 members. This is the number we're going to use because even if you were a member for 1 day in this question, you would have had to pay your full membership fee. So we expected income for 204 members for this year ending 30th of June 2014. Also during the current year, 16 members terminated their membership, but they'd already paid their membership fees for the whole year and they don't get refunded. So we've got 204 plus 16 and we would then expect membership fees from 204 plus 16, which is 220 members times 80 Rand per member. That's the expected income. So here's our 220 members that I just showed you. We have 204 members left at the end of the year, 16 who left during the year. So we're expecting that we would have had income for the year for 220 members. We're now going to look at how much money did we actually receive from the 220 members during the year. So we're going to look at the members who paid this year for this year. This 16,720 came from the statement of receipts and payments. I'll show you now. That's the amount we received in the current year for the current year's membership fees. If you divide that by 80 Rand, it means 209 members paid their membership fees for this year. Then we also had members who paid last year for this year. Remember, this was our amount received in advance at the end of last year. We already reversed this adjustment. That 320 divided by 80 means there were 4 members who paid this year's membership fees last year. So we got that money for the 4 members last year, the 209 members we got this year. So we've received money from 213 members. That's 209 plus 4, 213. So I'm going to show you here. There's the 16,720, which is the membership fees we received during the current year for the current year. And here's the 320 membership fees were received at during last year, but it's actually for 2014. So those two amounts are what we've used to calculate the actual membership fees that have been paid for the amount for membership fees relating to this year. We then end up with 7 members who haven't paid. 7 is 220 minus 213. 220 is the number of members who should have paid. 213 actually paid. 7 haven't paid. So if we take 80 times 7, it means we must accrue for income that hasn't been received of 560 at the end of the year. The journal entry for that is we're going to raise a debtor, membership fees receivable, 560, and we're going to credit income, membership fees, 560. This is what the membership fees account looks like then. So these membership fees have not yet been paid, but they are part of this year's income. And remember, we're working on the accrual basis. We've got to accrue for income even if we haven't received the money. The next step in step 3 is we're going to be writing off membership fees. So they tell us that membership fees receivable at the end of last year was 640. I'll show you that number now in the question. And of these members, 480 paid in the current year. So in the current year, it means there's an amount of 160 that we never received that we're going to write off. So you will see in the question, the end of last year, these were the debtors. They owed us money, 640. That was the amount that we raised as income that hadn't yet been paid. And then during the current year, we received 480 of membership fees that were amounts that received for the prior year. So here you can see 640 was owing, but we only received 480, which gives us the difference of 160 that has to be written off because it was never paid. So the 160 goes to debit membership fees written off, and we're going to take the 160 out of our membership fees account. So you will remember that we had the 640 over here. That was the amount owing at the end of last year by members. Included in this bank amount here was 480, which had been paid this year relating to last year's fees that were due. And then this 160 over here is the amount that hadn't been paid. So these two amounts together give us the 640, which was our membership fees receivable at the end of last year. So in this journal entry, we're taking the 160 out of the membership fees account because it's not income, and we are going to be debiting an expense membership fees written off, which is like credit losses. The final step is to do the closing transfer to the income and expenditure account. Here we have to calculate the balancing amounts, and when I do other questions you'll see that that's a shortcut that we can take, or we can use the expected income from membership fees for the financial year. So if we already look back at what we've already done, we know that for this year we had 220 members who were there at the end of the year, plus members who resigned during the year but who all had to pay membership fees. So we should have had income for this year of 17,600. So that's the amount that should go to income, membership fees on our statement of income and expenditure. So the membership fees account is going to be closed off by debiting membership fees, and the income and expenditure account is a closing transfer account. We'll credit that account with 17,600. So if you look, this 17,600 is the balancing amount on this account. This is an income account. It must have no balance at the end of the year. The full amount gets transferred to the closing account, income and expenditure. But this 17,600 is the amount we calculated that was due to us in total for membership fees for the year. So that will show as income, and the membership fees written off will show as expenses. So this amount will be income for the current year. The membership fees written off will be an expense in the current year. The membership fees receivable, this is going to end up being an asset, because remember we're crediting this account but debiting the membership fees receivable account. This is money owing to us, and membership fees received in advance is going to be a liability. We debit the membership fees received account, membership fees account, because we received money this year that only relates to next year. So we credit the membership fees received in advance account with that which is a liability. You are going to see that there are lots of questions to practice, and in the next lecture I'm also going to be doing another 2 questions for you on membership fees. So to finish off, I'm just going to show you what the trading account of a club would look like. Or sorry, I'm not going to show you, I'm just going to talk about it. So in an entity, you might have an entity that buys and sells things. Then that's called a trading entity. And then a trading entity has a trading section to its statement of income and expenses. The trading section is where you calculate sales and cost of sales. The trading section gets closed off to the income and expenditure account. So what happens in a club is that a club might, for example, have a tuck shop that buys and sells, or they might have ties that they buy and sell. So if they are buying and selling anything, it means they are trading in the club, and they will have a trading account like any business does that buys and sells goods, and the treatment of that is exactly the same as you would have done and we've done with you previously. But we are not going to be testing you on the trading account in clubs specifically. You can look at example 10.8 to see what a trading account for a club looks like. The statement of income and expenditure is prepared on an accrual basis, as you know. Only the income and expenses relating to the current year are taken into account. So we accrue for income we haven't received for yet, and we also take out income received in advance. With expenses, we accrue for expenses we haven't paid for yet, but we also take out expenses that we've paid for in advance. And you've learned how to do that in the previous chapters in this module. So this is what the statement of income and expenditure looks like for the year ended December 2003 for the Prince Albert Touch Rugby Club. Here's their income, here's their expenditure, and this is the surplus. We don't call it a profit, we call it a surplus in a non-profit company, because it's basically the difference between the income and expenses. And remember, the non-profit company is not there to make a profit. So we don't call it surplus, we don't call it profit, we call it surplus instead. If the expenses are more than the income, then we'll have a deficit. Just to finish off, you will also have a statement of changes in equity for a non-profit company, where you'll have your opening accumulated fund balance, changes in the balance giving you the closing balance. That closing accumulated fund balance is then what goes onto the statement of financial position at the end of the year. So for for non-profit companies, the membership fees account is what you need to focus on. In this lecture, I've shown you the other types of financial statements for a non-profit company. You already know how to do these things because we've shown it to you for sole traders, partnerships, and companies, but we're not going to be testing you on those in the exam for clubs. So the questions you can do, I'm going to do a second video on question 10.2 for membership fees, and also a third video on question 10.7 and 10.8 for membership fees. Other membership fee questions that you can look at are questions 10.6 and 10.9a. And then there are questions that have membership fees as part of the question. So the whole question is not necessarily applicable, but if you look at these questions that I've listed here, they all have membership fees calculations in them that you can use for further practice. Please remember to email me if you have any questions, and I'll gladly get back to you.